Welcome to the Maven Money podcast today. I have a returning guest, Mr. Barney Whiter of the escapeartist.me fame. He's a writer, financial coach, and a guy that I've stolen a few ideas off, which is quite rare these days. So welcome back, mate. How you doing?
I'm doing very well. I'm admiring your new haircut there, Andy.
Yeah, it's getting very long. I was actually thinking about this today. I was thinking next time I go to the barbers, I'm going to say, can you cut half the length off? I think my wife will be slightly happier. It's normally dictated by the
I'm
ladies, hey?
I'm just jealous. I'm just jealous. Don't worry.
Yeah, exactly. Today's a sort of wide-ranging conversation. I think it's about a year since you've been on. Before we were specifically talking about fire, but I think between the two of us, we can sort of talk about a few more far-reaching subjects. We're sort of focusing on what's happening this year in terms of COVID and how people have reacted to it and how it's impacted, work, investing,
Yeah, yeah.
property, fire, all the other stuff. So, yeah, over to you really to sort of start us off. So, yeah, where are we with everything really?
Well, I mean, you and I, what we share is a kind of fascination with, the markets and behavioural kind of coaching. The human aspects, and what a year, kind of
What a year.
2020 has been for just illustrating, what can happen, deep uncertainty, how humans kind of behave and react to uncertainty, how we really struggle with uncertainty, and kind of how we struggle to function in that sort of environment. So it's just been a hell of a year, hasn't it?
Yeah, 2020 has been a fantastic year for anyone who studies human nature. And the great thing about studying human nature is we're affected by it personally. So we're sort of analysing how we're feeling through things, and we're also observing other people. It's sort of enhanced because we're focused on the sort of financial investing and sort of money world. I look after clients. You coach clients as well. So yeah, let's just unpack this uncertainty because we live in an uncertain world. There is no certainty. It's not as if there's a headline that says certainty next few weeks. There's always going to be something that sort of crops up. So yeah, how do you see us humanoids dealing with certainty versus uncertainty?
Well, if I just kind of play back my experience through the year, I remember back in January, Nassim Taleb, of kind of Fooled by Randomness and Black Swan fame, he published a paper, I think it was January the 29th, about how to deal with pandemics, and I kind of follow him, so I was aware of it. It kind of cropped up in my Twitter feed, but I didn't pay it a huge amount of attention, if I'm honest, for the first few days, and then the kind of drumbeat of the news starts to amp up,
Yep.
and it was just interesting, somewhat scary, but a fascinating case study of how a threat that one moment is on the far horizon comes at you pretty quickly, and how people respond to that. How do governments respond to that? How do individuals respond to that? And how do the financial markets respond to that? And it's just from that point in January, to if you like, the sort of the peak, or rather the trough of the stock market, which I think was in late March, and now we've got the lifting of, or the easing of, lockdown. It's just been one of the all-time kind of classics, in terms of how do people process uncertainty and how do they respond to uncertainty.
It's been many years since we've had a sort of global panic. I mean, before it was obviously more of a financial panic that then sort of seeped out into the real world. This time it was a real world panic that then seeped into the financial markets. And frequently the media are there to, bang the drum of something horrendous going to happen, but frequently it doesn't. So people like me and you are quite optimistic and we're all saying, don't worry about it, it's going to be okay. But this time it was, let's say, the wolf, whereas before it's always the sort of cry of the wolf. So how did you
Well,
process that?
that's interesting, because I remember quite clearly 2008, 2009. And so in 2008, 2009, I was working in restructuring. And so I was, in that sense, in the eye of the storm. because my day job was advising companies and banks and creditors on companies that were hitting problems and not able to service their debt schedules. And so I was kind of in that world at that time. And so I'm watching kind of what's happening in the news. The day that Lehman went down, I was in America. So I remember that period really, really well. And it was terrifying. I mean, it was absolutely terrifying, because often the stuff on the news is kind of hyped and overdone. I kind of knew at that time in 08, 09, it wasn't overdone at all. In that sense, people were right to panic in 2008, 2009, because there was a point where, RBS was, not that far off, kind of shutting the cash point machines off. And I was hearing anecdotally of the outflows from big deposit taking banks. So that was we came very close in 08, 09 to kind of the money system stopping working, and then
Sure.
the lights go out. Kind of compare and contrast with COVID. There was this period of uncertainty early on when no one really knew, how infectious it was, kind of how it spread,
Yep.
etc. And there was a lot of misinformation flying around. I remember like the World Health Organization put out some tweet saying there's no evidence of person-to-person transmission of COVID-19 in February. And so, there was that kind of weird, strange period where no one really knew what was going on, including the experts, and that was scary. But I think that pretty quickly it was possible to get a handle on the fact that this was not Ebola. This was not.
Sure.
This was a different order of magnitude to that sort of fatality rate, and so it became possible, reasonably early on, to kind of think about risk and risk mitigation, and what the impacts might be on the stock market.
Sure.
And I think one of my takeaways from this has been the stock market is an amazingly powerful supercomputer at essentially processing all the information that's out there from public health authorities, from epidemiologists, from studies, from
Just
academics.
every single possible source that you didn't even knew existed, or has ever been published. Yeah.
And what the stock market does, it kind of hoovers that up.
Yep.
It absorbs it, it processes it, and it processes it a million billion times quicker than a normal person can, or
Yep.
certainly than I can. And it does it quickly, it does it efficiently. And so essentially, to me, it's reminded me of the gap between, when the stock market is kind of processing information, and when, if you like, the man or the woman in the street is processing the information.
Yeah,
so
that sort of lag, isn't there?
There's this huge lag. So yes, I think a couple of days ago, I'm sat with someone, and they were very gloomy and kind of a little bit despondent, and they're worried about their future, and they're worried about their finances, and they're worried about saving for retirement. And they're saying, well, I don't think the stock market really, understands that, just how bad the economy is going to be. And I'm like, dude, this is August. That was where the stock market was in March. When the S&P 500 was falling 11% in a day, that was when the stock market was processing this deep uncertainty and kind of struggling to
and bringing it way forward.
And so the stock market is at least 6 months ahead of what you're sat here now telling me that it's bad. Like the stock market knew that a long time ago.
It's amazing how fast it cleanses that information. Really, it's sometimes it's a little bit too fast, but yeah, certainly individually you're sort of clueless.
Just two things. I mean, I think what's interesting about the sort of COVID downturn was the speed. It wasn't the most severe drawdown by any means. So the layman kind of global financial crisis drawdown, much more like 50% peak to
Yeah.
trough. This has been less severe than that. But what made it so interesting and somewhat scary was the speed of adjustment.
Yes.
That the fall, the fall of 25% or whatever it was happened very quickly.
But that actually was good news for investors because they didn't have time to over panic. It was like, let's just rip this band aid off. If I was just tearing it off slowly, you're like, Andy, I need out. It was just like, shump. They were like dealing with family, friends, work colleagues, children. And they're like, oh, let me look at my stock portfolio. Oh, it's down shed loads. Oh, it's probably COVID. I should go to bed now.
Yes,
it's not.
yes.
It's not like complete negative news for 9 months and the stock market's down, minus 57% or whatever it was in the GFC. Yeah, yeah.
Yeah,
So,
yeah.
so the
Well,
speed was good news for the average investor.
I agree, and this is obviously this is before my time, but I remember my dad telling me that, like in the 70s, essentially the stock market kind of ground downwards slowly over 5 years, and it was just he
Yeah.
just said it was just drip, 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 drip every day, just a bit
Torture.
lower, and it
Yeah.
was torture. It was like Chinese water torture
Yeah.
because at some point, everyone, you're obsessing on it, and it's being reinforced every day, and at some point you break. And that was the beauty. Yeah, the beauty of 2020 is
Was the
it was
speed.
is a rapid adjustment and a rapid and pretty efficient repricing of equities.
Yeah, definitely. Yeah, the decline was almost unprecedented. I'm sure. Yeah, some number stats will come out with something, but certainly we're not seeing it in probably most people's lifetime. And isn't it odd how the world has a funny way of sort of rhyming as such? Like we had sort of 11, 12 years of the good times, and there was nothing on the horizon that was like, actually, there's going to be a bit of a reset here. Like we've had it good for 12 years. I don't think it's going to carry on for another decade. Obviously it could happen and nobody's going to make predictions. And then boom, just comes out of absolutely nowhere. But the good thing again was the economy was quite in a good position. We were well capitalized, both companies and individuals. Unemployment was very low. Banks and governments were okay. There wasn't anything majorly on the horizon or sort of baked into the pie that was potentially going to explode. I mean, there always is something kicking about that you
Yes.
can't see. But if you had to pick a time when a pandemic was to happen, you would have said, "Right, let's do it now, guys."
Yeah.
January 2020. Let's pull the trigger.
Well, it's interesting, and the stock market kind of makes fools of all prediction, all
Yes,
people
yes,
that kind of
yes,
peddle predictions.
yes.
It makes fools of all of them eventually.
Yep.
And one of the things, and this is, I hold my hands up on this myself. One of the things that I was concerned about was, whether, particularly a few years ago, but like were the tech companies overpriced, and was that the source? Or was
Yeah.
this
Was
kind of
that going to be the blow up? Yeah.
was that going to be the blow? Were we going to have .com 2.0? And
Yep.
actually, if you look at what's happened, CV19 has just accelerated the underlying move of money and economic activity online.
Yes.
It's every day is Christmas for Amazon right now. Every day
It's unbelievable, isn't
is
it?
Christmas for Amazon and Google and Netflix and and Apple. And so essentially the thing that a lot of people, including myself, kind of had one eye on, it's been the opposite. Those guys have benefited from from the crisis.
Massively, yeah, massively. If there was one company that you could pick that didn't deserve to benefit from this, it would have probably been Amazon. They were doing well enough. Um,
Yeah.
Another point you sort of mentioned, sort of putting stuff together before the show, was about information being abundant, and it's just now so hard to get signal from the noise. So yeah, what's your thoughts on just the deluge of information that's out there that just scares people?
Yeah. Well, I think that it has been a weird time, and it's been a scary time for a lot of people, because if essentially, people have been locked up in their houses and plugged into the news, plugged into social media, plugged into, I would argue, excessive information. And so, if you just kind of take the historical perspective on this, 100 years ago, the media performed a very valuable service because it brought information to people starved of information. That the newspaper had genuinely new news in it, interesting news, kind of stuff that you needed to know. I mean, I grew up. I used to read. I used to read the Times cover to cover, because it was kind of important to do so. But the world has changed, and we're now kind of drowning in excess information. We're drowning in clickbait. We're drowning in
Yeah.
low quality information. We're drowning in
Adverts. Yeah.
adverts. Marketing. Um, and those guys know that fear is the most powerful thing that kind of hooks people's attention.
Yeah.
And so today's problem, I think, is an excess of information. It's too much time on the internet. And so I actually think screening that out, yourself is really important kind of for your own sanity and state of mind. But it's also, I was saying to you earlier that I think the role of curation has become more important. That so people or information providers that do screen out all the crap and are not just trying to sort of drive clicks and scare people. Those people will come out well from this eventually, because people will just realize that curation is valuable in a world of excessive information.
Very much so. Very much so. Um, Moving on to work. So this has had a big impact, massive impact, and I think it's just starting. Large organisations trying to work out working from home, how they're going to deal with the tech, how they're going to deal with sort of systems, processes, and then even sort of smaller firms. Um, Prior to this, I think a lot of people were paying, lip service to technology. Like, yes, we're remote ready, we're disruption ready. Yes, we've got a disaster recovery tick on the insurance box. And then when it happens, everyone's flapping about and saying, what's the cloud and I need to buy a laptop. That's the extreme case of it.
Yes.
So yeah, how do you think work has been affected by this? Specifically to the UK, we've got a little bit lucky. There has been a bit of a heat wave going on, so people have been, enjoying that. So yeah, what
Yeah.
thoughts on work? Where are we with that?
Yeah. Well, I mean, on my blog, I am kind of critical of lots of aspects of the office and the modern workplace, and
Yep.
I would argue rightly so. But I mean, the office did perform a function, right? The
Yep.
function of the office was to get people together, to share information, and to kind of motivate people. And so once that's gone and everyone's kind of in their own their own house, or their own flat or whatever, um, you know that's that's tough for people that don't self-motivate. That's
Yep.
tough for people that are bad at managing themselves. They're bad at kind of getting out of bed in the morning, that are bad at screening out
Yep.
the temptations
Yep.
and the
Yep.
distractions of working from home. So in that sense, it's just kind of been, again, it's back to, I find the behavioral aspects of that fascinating. It's kind of more important than ever that like people kind of manage themselves, or
Yep.
or find ways to embed good habits. So to me, like lockdown is like, if you're a kind of a good habits person, lockdown's been a great opportunity in many ways, because you get to control your own environment. So if you're in your own house or your own garden, you're not being distracted, pestered, bothered. You haven't just got people walking into your cubicle or your office or whatever, distracting you. So for people that can self-motivate and self-manage, lockdown's been great, and it allows you to do what Cal Newport calls deep work. That kind of really focused, hard thinking, like computer coding, software development, for example. But it equally applies. I mean, I write, so lockdown's great for writers.
Yep.
The you just get more control. You're just not pestered by people to the same extent. So to that extent, lockdown's kind of shown the difference between people with that kind of know that they've got to kind of manage themselves and manage their habits, and those that have traditionally relied on, if you like, the system to do it for them.
I think lockdown COVID one of the fundamental messages is it's amplified your good habits or it's amplified your bad habits.
Mm.
So that's what a crisis does, doesn't it? It amplifies everything and makes everything just a bit more extreme.
Yes.
Um, but I'm a fan of the sort of blended life, as in you go to work, do a few hours, then you go to the gym, then you go home, then you do a few more, then you come to the office, have a meeting. Having a bit of a blended life with boundaries, obviously, but that just means setting your phone up correctly and your computer up correctly. Depending on wherever I am, I can either be working on or not because it depends on what I'm accessing on my devices. Nobody's really working if they're a knowledge worker and they haven't got access to their devices. And if I am doing that and I am working, I'm just thinking about a problem, if that makes sense.
Mm.
I think Rory Sutherland says it. He says, if you just position yourself in a nicer environment, i.e., the garden, you feel a lot more happier about your work. It's these tricks you have to play with yourself,
Yeah.
play with your sort of mind as such. Obviously, that's different if you're in a situation where you've got a lot of distractions, kids, cats, dogs, small flats, etc., etc. So there's been winners and losers on either end of the spectrum, hasn't there? But this sort of death by remote meeting, I'm maybe not going to mention Zoom, but death by Zoom, death by Teams, death by all of these video conferencing calls, which is okay if the meeting's important, like we're having a call today. This is the only way we could do this, and it's quite an important thing I want to get in the diary. But if it's just a touch in with my team and what do they call it? What do they call it? Touch in? A check in. Oh, we're having a daily checking at 9:30, and after day 4. I don't know about yourself. It was all about Zoom quizzes and Zoom drinks and stuff. That just fizzled out around sort of mid-April, I think, and everyone's not had a Zoom quiz since. It's funny how these things just take hold and then they fizzle out. Yeah. So any other thoughts on work? I know you sort of got a few things about location independence. So yeah, what's your thoughts on that?
Just, I mean, yeah, just on that Zoom point, it's like anything, right? There's pluses and minuses, and so for me, I was primarily doing kind of face-to-face coaching beforehand, and that's just gone to Zoom for the most part,
Yeah.
and actually been surprised how well that works, and so I have been able to chop out a bunch of travel time from my diary, and that I used to kind of think, oh well, I'm efficient, I'm making mindful decisions, but actually it's kind of shown me that
Yeah.
I wasn't quite as rational as I could have been, perhaps, or I wasn't quite as efficient as I could have been. Shown me some room for improvement. But you're right, I equally hear other people talking about Zoom, and it's like the day just
All
gets
day.
separate. It's just 8 Zoom meetings a day, or
Yeah. Imagine being on the phone from 8:30 till 6 on Zoom.
yeah,
I mean,
yeah.
it'd be absolute pain. I'm like yourself. I used to do training financial advisors, obviously meetings with clients, and it was all face to face. I thought that's the way it went, and I've shifted the bulk of it on Zoom, and it's been fantastic. When it opens up, I'm sure I'll do a bit of a blend and a hybrid, but it might be my
Yes.
default is Zoom. Yeah, yeah, it's interesting that I've been playing that in my mind, saying. Don't take a crisis to disrupt your own business. Just sit there when things are going well. It's not as if things are going badly, but it's like actually you could probably deal with this in a slightly different way. So maybe in 2 or 3 years' time, I need to sort of play a crisis out in my head via my businesses and think, how can we tweak this and do things slightly differently? Maybe.
I think that the location independence is a double-edged sword, though. I think it's great in terms of efficiency. I think it's great like if we collectively avoid the 1 hour meeting in Frankfurt or the 1 hour meeting in Barcelona. I mean, I used to do quite a few of those
Yeah.
in my corporate career. I mean, if those go onto Zoom, that's excellent. That's a big win. But equally, there is a danger for all the office workers that just want to kind of stay at home forever. In the sense that if work can be done 100% remotely, well, there's a lot of people in India that speak very good English, and are very well educated and willing to work for not very much. So there are definitely dangers in that, and I think that the way what's the message? The message is be flexible. Look for the best way of doing things. And I do think, again, in kind of the game that you're in, where it's kind of behavioral management, behavioral coaching. there are some cases where it does make sense to be face to face. I had a, the guy that I was talking about earlier, that he was sort of talking about the stock market hasn't understood how bad, he basically,
Hasn't understood the economy.
well, he said to me before he came round, I know I've got some blind spots, and I kind of want you to shout at me if I'm wrong. And so I kind of took him at his word, and I challenged him hard, and that was probably a more transformative experience for him face to face than it would have been over a um, Zoom link. So I think there are some things where you obviously just got to be face to face, but it's the balance is fascinating.
Yep. And business travel, just to mention it, yeah, it's going to have a serious impact. It has to,
It
and
should do.
and there'll be questioning every abroad trip. Like, is this absolutely essential that you need to be there? And that's going to be interesting to see how the travel business recover from that, because the bulk of their profits come from the Monday night stays. I've observed London hotel prices. I think the cheapest day of the week is Sunday, and then it gets progressively expensive throughout that, as in Monday's a bit more expensive, etc., etc. But yeah, it's basically pandering to the business traveler, isn't it? And in
Well,
high
and
airlines.
I mean, obviously, some business travel is necessary, but a lot of it is for show. A lot of it is about status. A lot of it is so that kind of executives can go away from home and kind of rock
Yep,
into a prestige hotel, and they can kind of show their silver points card or their platinum
yep,
points card, all the rest of it. And there's
yep.
quite a big BS element to all of that.
Even Rory Sutherland picked up on the point for me. I didn't quite realise it before, because of the lack of annual holiday in the US. That's why the conference business is so much
Yes,
bigger than the rest of the world. So if you've only got 10
yes,
days holiday and they're saying, but you can go to a conference in Florida for
yes.
3 days at the end of the week, you're just going to go for 7 days and fly the kids and wife over on so you actually feel like you've got a few more holidays because you're going to sprinkle in a few conferences. So conferences are sort of quasi holidays,
Yeah, yeah,
for
yeah.
most people,
That
where the business sometimes picks up a big chunk of the tab.
Yeah, that makes perfect sense, actually. So, I mean, there's too much business travel in Europe, but oh my goodness, in America, they're
They're
crazy.
hopping all the times on
Yeah,
planes, yeah.
yeah.
So let's now move on to investing. So 2020, the year of the behavioural investor. You're heavily involved in the FIRE movement. Your blog sort of initially was focused on the FIRE movement. It's now sort of got a bit more of a wider reach, let's say. So yeah, where are we with investing in the stock market, and what sort of lessons have we learned, sort of leading into it, sort of midway through it, and sort of post it? Where are we with that?
Well, to me, it the downturn, the COVID thing, it showed the resilience of the infrastructure, or the plumbing, if you like, of the market. And so, you know, there was that kind of Michael Berry article that got a lot of traction, got shared very widely about a year ago, saying that come the next downturn, all the index funds would kind of blow up because all the ETFs would blow up, and it just hasn't happened, obviously. So there were a few exotic products that
I
blew
was
up.
going to say I'm concerned about ETFs,
So
synthetic
there were
ones,
there was
and
some there was
who knows what.
there was a fascinating case of there was a 3 times leveraged synthetic crude oil
Yep.
ETF that spectacularly blew up, early on in COVID, and essentially, the bank that wrote the swap that allowed closed
Yeah.
it out, and so immediately the investors kind of lose everything, and the thing gets folded. So yes, it's been a reminder that kind of flaky stuff is flaky,
Yep.
and that synthetic and derivative equals unproven, untested. But no, the basic, the plumbing of a global equities tracker fund. I mean, that is those have performed like a dream, and actually they've allowed you to prosper without without a view on what sectors are going to win and lose. because it's just been it's been fascinating from a sectoral point of view, hasn't it? So you've got annihilation for airlines, hotels, hospitality,
Yeah.
and you've got boost for say tech, for example. And so net we're not that far changed from where we were at the start of the year.
And 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 that's how it works. You mentioned that the stock market's a supercomputer. The most hardest working supercomputer AI on the planet. It's also a cleansing machine. So companies and sectors that are going to struggle during a crisis, it will exacerbate that, and it'll push them out of the whole market, and then new companies will come in. That again is the great thing about buying a standardized global equity tracker, because you don't have to choose what sectors are going to die and what sectors are going to fly. So again, it's a
Exactly.
cleansing machine long term.
Yes.
Some people say, yeah, okay, I get it's a cleansing machine, Andy, but what about tobacco? Why is that not out of it? I'm saying, well, it slowly is coming out of that, and then we're going to have e-cigarettes, then they're going to be banned. The oil companies, why are they still in it? Well, they are, and then they're going to go green, and then they're going to be out of it. It's a cleansing machine, but sometimes things take a long time. Then you could pick the gambling industry, where we're going to go with that, blah, blah, blah. But it cleanses and just generally gets rid of bad things and puts the good things in it. But sometimes it just takes a little bit longer than we hoped. I think there's still about 2 tobacco companies that pretty much own every single brand. It's like,
Well,
and they're
well,
slow.
I mean, if you look at what have been the most successful stocks in history, I think Philip Morris is one of them. I mean,
Wow.
over 100 years, that company has made a lot of money. Or,
Well,
I'm not saying it's right or wrong. I'm just
yeah,
saying that those are the facts, right?
I know. I think Buffett says you sell it for $1, it costs 1 cent to make, and it's highly addictive. You know.
Yeah,
Do you need
yeah,
to say anything more? I mean, I
yes.
wouldn't be surprised by that. You walk down any high street in the 70s and the 80s, it's just, what is this cloud of smoke? Like, obviously, these companies are doing well. And anything else in terms of about investing before we move on
Yeah.
to?
Well, I mean, I think that there's this. I always say that there's two kind of asset classes that work for long-term wealth accumulation. There's the stock market, and then there's real estate property.
Yeah.
I guess the third one you would add is like real businesses. But
As opposed to your stock market, just
well, I mean like your own business.
tagging onto the
You,
back of the other real businesses, your
your
real
own
business. Yeah.
your business that you work on.
Yeah.
So if you look at I've never been like dogmatic, saying, well, I'm a property guy or I'm an equities guy. I mean, actually, if you look in the UK, the long-term historic data is actually, there's not that much in it between
Yeah.
residential real estate and
Yeah.
the stock market. So kind of 8 or 9% a year or whatever. To me, though, the 2020 has shown some of the hidden risks of property,
Yeah.
and the fact that it is not 100%, it's not passive income, right? So I was saying earlier, my wife actually works she's got like a part-time job for a lettings agency, and so a lot of tenants are struggling to pay their rent, or taking rent holidays at the moment. And so,
Yeah.
if you were thinking, do I put my money in that horrible, scary stock market that's volatile, or do I put it in this lovely, safe bricks and mortar that I can touch and feel?
Yeah.
Well, 2020 has been a little bit of a wake-up call for you,
Yeah.
because maybe a tenant's been fine through it, but maybe they haven't. Okay.
Yeah.
And if you can't, essentially what's happened in the economy is that the suspension of creditors' rights, the suspension of property rights, the suspension of the ability to kind of take control back of your asset for understandable and humane reasons. But
Yeah.
to me it's reinforced the point that the stock market's dangers are very obvious, but that's the good thing about them. They're priced
That's the
in.
reasons for the returns. Yeah.
That's the reason for the return. So to me, 2020, another message is, you can go wrong with bricks and mortar. It's not always it's not always as safe as a lot of Brits think it is.
Yeah.
The other thing that I mean, I haven't really followed this closely, but I am expecting peer-to-peer lending to get
Yeah. Yeah.
annihilated.
I think we both have strong opinions on the overall sector for just generally avoid it. I'm like yourself, a fan of global equities, which I call businesses. and I'm a fan of physical real property, which I call bricks. Yeah, anything else property linked related flavour, avoid. There's often blow ups, and it's just not worth the risk. So yeah, we're both
Well,
short on
there's
peer-to-peer lending.
there's two. I think I kind of think about two forms of peer-to-peer lending. I think about the sort of crowd, the property crowd sort of funding sites.
Yep,
Um, and I'm not kind of for or against them, but
yep,
they don't have a long track record, and so
yep, yeah,
it doesn't pass the test of what's always worked.
yep,
But I'm even more bearish on the stuff that isn't property backed and that is just peer-to-peer lending, because that's essentially subprime lending to people
yeah.
that shouldn't have been borrowing in the first place.
Oh, you
And
talk about on the loan side as well. Okay.
on the sort of loans so that
Yeah, yeah,
people
yeah, yeah,
can
yeah, yeah, yeah.
buy cars or whatever. And
Yep.
I've always found it a bit bizarre, when people in the fire community say, well, I'm doing peer-to-peer lending. I'm like,
Yeah,
that's really lending to people that shouldn't be borrowing, and that they
yeah.
can't really afford to that car that they're buying with the loan.
It's cash or global equities, and keep as minimal amount as you need in cash for your actual uh, real reasons in life, and also your emotional comfort level. The rest, put it in global equities. Why do you want to have then this weird gap in the middle? I've got my cash fund, and I've got this weird thing that I don't quite understand that looks great on the sales material, and then I've got my global equity tracker. It's like, just keep it simple. Keep
Yeah,
your cash and
I
keep your
mean,
equity track.
when people say we haven't seen the worst yet, I think they're wrong
I
about
think,
I think they're
go
wrong
on.
about the stock market, and I think
Yep.
they're right about the
Lots of other stuff.
lots of other stuff, including peer-to-peer lending, which a
Yep.
year from now will be brutal, absolutely brutal. It'll be like a battlefield littered with corpses.
Yep. But again, this is what we've been telling people. Avoid anything which is working now, and I've always put that in that box, and a load of other stuff that's going to blow up as well. Following on from that, again, I'm quite into greed scams, which are usually financial scams that overpromise and then blow up, and then people run away, and then they're on the front page of the money magazines, etc., claiming that they had no involvement in it, even though they were trying to do it to get some money, which is completely different to a genuine fraud where someone's accessed some information and taken money from you without you thinking you're going to financially benefit. So we're going to see a lot of stuff come out of this. And again, whenever there's a crisis, whenever there's a lot of volatility, whenever there's XYZ, marketing companies who are disguised as financial companies come up with something that seems perfect after a bloodbath. So yeah, where do you think we're going to go with that?
I think we're going to see anti-inflation product scams. So I think we'll see crypto related scams. I think we'll see gold related scams. I think we'll see silver related scams.
Yeah,
Stuff where you're not buying the physical gold coin, but
yeah,
it's in this vault that we've got. Honest.
yeah. It's doing really well. You've seen the price. Yeah,
So in the some odd things are happening in terms of the amount of money that's being printed in the economy, and that's
very
increasing.
odd.
That's increasing inflation risks down the track, and
Just
so people will be
go on.
worried about that.
And just on that, Barney, whenever you think a government has sort of maxed out its credit card, think again. 2020 has been, there is always more, especially the US and the UK. I think the government's acted quite swiftly and quite correctly. Obviously, we're still in the mix of it at the moment, and they're still propping up a lot of economic activity. We don't know exactly how it's going to pan out. But I think they've acted pretty swiftly and done the right thing in part. But it's very interesting. If you ask them, end of last year, have you got the capacity to write a check for 500 billion? They'd say not in a million years. When it's like, Union now need to write that check for 500 billion, or we're going down, they're like, we're going to find the money. We have to find the money.
Well, they do have the advantage; they can just invent the money on a computer. So
exactly, and then hopefully someone somewhere says we'll sort of buy it long term. Maybe we sort of like the UK. Yeah, we helped you out like 90 years ago. Do you remember? Very interesting. Moving on to insurance now. So I'm a massive fan of insurance. I'm a financial advisor, so I obviously protect people and also help people grow wealth. Um, I saw a big uptick in income protection. Not like, oh my God, I think I'm going to get COVID, Andy. I need income protection. It's going to pay me out. It just gives them a bit of a kick up the arse, which is fantastic. And they're thinking, actually, we're not, invincible. Things could happen. Things might happen. I've been slightly putting it off, and I know, I've been thinking about it, or my financial advisor's been banging on about it. So now I need to sort of pull the trigger. So I think there'll be a big positive increase in insurance being taken out. In the UK, it's called the protection gap. Let's call it the human insurance gap. So that's life insurance, critical illness, and income protection. I think all of them will benefit from this, post COVID, when people are in a financial position to take stuff out if they can't afford it at the moment. So yeah, what's your thoughts on insurance?
Yeah, well, it's again, like COVID's been the ultimate short, sharp shock in terms of reminding people that stuff goes wrong.
Yeah,
Shit happens, and
yeah,
so for me, the most kind of powerful takeaway is like, everyone needs an emergency fund, just 3-6 months cash in a bank account, but equally, you can achieve, you can mitigate risks and protect against risks and insure against risks in different ways. And insurance is just another tool. It's just another way of doing it. So it can't but put that point like front of mind. So I'm with you. It will almost certainly boost income protection if the insurers will write it.
yeah. Sure.
And
Yeah, that's
you kind of
absolutely.
read the small print there.
Yeah. But history telling us it's very sort of high payouts on income protection. Most of them are plus 90%. Specifically to pandemics and stuff, yeah, that is clause 98 and one word missing and we're sort of out of it. Yeah, there's been a lot of issues with business interruption insurance. That imagine a policy called business interruption insurance, and the insurer saying, "But I don't know if your business qualifies for business interruption insurance." It's like, well, what more do you want me to prove to tell me my business has been interrupted?
Yes. Well,
So it's
I think there's two worldviews on insurance. That there's, if I call it like the normal worldview, where kind of more normal, affluent consumers, what's right for them. Perhaps some of your client base. They are kind of, but for those people who are running their finances, without some enormous safety margin, and they've got, they bring up families and
yeah,
they've got a mortgage, or those people need insurance. I accept that. Then you've got the kind of fire mentality, which is I'm going to be kind of uber frugal, and I've got
yeah,
this kind of huge safety margin built in. That's why I basically didn't have insurance. So I think either of those positions, can work for an individual, but you've got to have something in place, right? Because just going into COVID as you would put it, a financial illiterate without insurance and without an emergency fund, well, the tide has gone out, and we'll see who's been swimming naked.
yeah. And hopefully, as a result of this, as a positive result of this, yeah, people will take ownership, take more action, want to pay down debt, want to set up an emergency fund, insure themselves correctly, and start
Well,
investing.
just on that point, paying down debt. I mean, that's fascinating that you raise that. So, what I read is that the aggregate UK savings rate in January was 5%, something like that, and it went up to 30% during lockdown. And
Yes.
so, a lot
But
often.
that's not spoken about, is it? People are just saying, "Yeah, it's terrible out there." They're not saying, "Actually, I'm doing all right at the moment. I've got excess money at the moment, and I'm just chipping down my credit card and loans." You know what I mean? It's just we moan about the
Well,
weather and being in debt.
Well, no one holds their hand up
Yes.
during a pandemic when
Yeah.
loads of people and say, "I'm doing really well. I'm doing really
Yeah,
well."
I'm paying off my credit cards.
Um,
It was going to take me 18 months. This pandemic means I'm going to clear it in 6 months. It's been brilliant. Yeah.
so the new, the news does the news are very good at shining a light on the people that are struggling.
Yes.
But the kind of the silent majority who maybe are doing okay,
Yes.
they're silent. And
Yep.
so, to me, what's the message from that? People often kind of shout at me and sort of say things about, oh, the trouble with these fire people, that they think that it's possible to have a 30% savings rate or whatever, or 50% savings
Yeah.
rate,
Yeah. Yeah.
and it's impossible. Well, just look at the aggregate economy and we had an aggregate savings rate of 30% across a country of whatever 70 million people. So that shows you what's possible when push comes to shove, and a lot of this discretionary spending just is taken off the table. You know, the restaurants, the takeaways, the cinema, the theatre, the theme parks, the hotels, the mini
Yep.
breaks. When that stuff is taken away, a
Everyone can get saving.
a
Yeah.
30% savings rate absolutely is achievable.
That again is a reason why people were doing sort of okay, because the stock market went down so quickly, but they didn't need to withdraw money because they weren't spending any. So again, we had a forced fire experiment. We had a forced discretionary spending experiment.
Yes.
And people saying, "Well, no, I have to have my 4 holidays a year." No, you don't. And I have to eat out at these certain restaurants. No, you don't. I mean, the anecdotal example with my missus when we were going through this. Normally, if my missus says, "Get me some shampoo," it's like 6 levels of instructions. This one, that flavor, that color, that. And I'm like, okay, darling,
Yeah.
yeah, I'll try and find it in the Tesco superstore. They might not even bloody have it. During COVID, Andy, I need shampoo. What one? Just shampoo. So
Yes.
again,
Yes.
everyone's standards. It was like, we just need pasta. Well, what pasta? You normally only have gluten-free whole meal, XYZ brand. No, just get me pasta. Get me shampoo. you know,
So
yeah,
this is a point I bang on about, which is essentially in the modern economy, you choose the price you pay. So
yes,
like if you go and get value shampoo at Aldi or Lidl, that's essentially free.
yep,
Compare and contrast with L'Oreal because you're worth it,
yeah,
etc., etc. I mean, just look at the margins on
yep,
L'Oreal. Look at their
yeah,
accounts, right?
yep.
Great company, but that's my point. You choose how much you pay for most things in a modern world.
As Rory Sullivan says, he says, I don't want to buy ATP aspirin. He says, sometimes I've got a £4.50 headache. If you spend ATP on aspirin, you're like, this is not going to do it. It's like, I want to
I,
buy this
I,
premium product aspirin.
I
It's
want
legal, you
premium.
can do it.
I want premium placebo.
I want premium. No, yeah. Well, it's not quite a placebo. There's that gap.
I know. I know.
There's a placebo gap, but then
Yes. Yes.
the
Yes.
essentials are the same.
Yeah.
Everybody, the forced discretionary spending and everyone's standards hit the floor, and they should hold on to that. They should
Well,
hold on to that.
I mean, I call it. To me, lockdown was what I call monk mode. Right. So just
Yes.
imagine where. I mean, I've done this in kind of periods of my life when I was broke and I needed to earn some money. I basically just turned off the tap. I just turned off
Yep.
the spending taps, and I just worked and I slept and I rested, and I call that monk mode.
Yep.
And monk mode is possible,
Yep.
and and you know, people might say that, I don't understand, just how kind of tough people at the bottom of the pile have it, and it's a fair criticism. But the tougher your situation, the more you need like monk mode, the more you need that resilience, the more you need to be able to just essentially turn off the discretionary taps, until such time as you're in a better situation and you can be sensible about it.
Yeah, I really enjoyed that forced experiment. Yeah, discretionary spending. Yeah, very, very interesting. Yeah, really, really, really good. I think there's probably more we can say about that, but let's nudge on. So, specifically around fire, how have you seen the sort of fire community sort of deal with this, the good, the bad, the ugly, sort of leading up, mid, post, sort of COVID? I'm
I
sure a
mean,
lot of them were panicking. I'm sure a lot of them were panicking. I'm sure a lot of them are sold. I'm sure a lot of them done silly things with their investing. But yeah, what have you seen?
well, I mean, I would say it's been a vindication of, the principles of financial independence. But I guess, yeah, I mean, some people, it's kind of shaken some people loose from those principles, no doubt.
Because
So,
11
sorry.
years of 11 years of rising markets is when the fire movement has really taken hold. So very few fire, well, yeah, very few fire people have experienced a deep temporary decline. But yeah, sorry, mate, go on.
Well, it's odd because I mean, I was on a fire bulletin, discussion bulletin board thing, and I just saw someone saying, oh, this was early in the year. All of my money that I had to buy for my deposit to buy a house, all of that was in the stock market. And I'm just like, oh, you idiot,
Yeah.
you absolute idiot. And I know that, you know, that person was an intelligent professional,
Mm.
um, who kind of reads all the fire blogs, and yet they've still made that absolutely basic
Basic
mistake,
error.
basic
Yeah.
error. And so, we all have blind spots. You can read, so I guess, it shows that it's possible to, read all the fire books and all the fire blogs and still screw up, right?
Yep.
I mean,
Yep.
and I we've all done it. I screwed up in the 2000 to 2003 bear market. Kind of capitulated at the bottom, then kind of learned my lesson the hard way. So I'm not saying this, because I'm smarter. I'm just older, and I made those
Yep.
mistakes.
Definitely.
Um, but yeah, that would be, as you put it, the problem with being, penny wise, pound foolish, not paying for a second pair of eyes, not paying for a sense check, not paying someone to challenge you, not paying for help.
Or some would say, don't do that.
Yeah,
You know, the, the
exactly.
the the greatest words of three words of financial advice can say, don't do that.
Yeah.
Um, the other thing on that, I mean, I've put out a podcast called Minus 50. If you're investing in the stock market, that number should be, front of your mind. You hope it doesn't happen at a sort of opportune, as an inversely opportune time to your personal situation, but it's going to happen. It's going to happen at some point. I mean, this time we got to sort of minus 35. If you're invested a bit more in small value companies and maybe sort of emerging markets, you hit a bit more of a deeper decline. I hit a minus 40% on the bulk of my money. Again, during it, I was smiling when I was specifically looking at the investing, because I prepared for this. This is the Olympics of the long term, successful investor. And a lot of other people who are sort of involved in the fire community, not exactly professionals, but people I know in this business, they're saying, you know, I'm surprised how well I did during it. Everyone around me was panicking, and I was thinking this is a great opportunity. If I'm investing every month, I'm now getting more for my money, and pound cost average, all the stuff we've spoken about. The minute there's a sale in the stock market, the people that have been buying it forever just push away, and it's like, are you not seeing this? A sort of point we mentioned previously. I'm amazed how I'm amazed at the impact that this has had for the general economy. If you look around and you just anecdotally experience your life, you
Mm.
think it would be way more impactful than what it shows you how much commerce happens that's not visual, to your, in your vision.
Yes.
The bulk of the economy is obviously knowledge economy, big contracts, big company,
Yeah.
tech, all that stuff, invisible stuff. You walk down the high street in, mid-March, you're thinking, what, GDP's down, pick a massive number. And when it came out with just this number, then that number, then a big bounce. So what you see is not the economy. That was, again, as a bit more of a lesson to me. What
Yeah.
you
Yeah.
don't see is the economy. Well, the
Exactly.
the bulk of what you don't see is the economy. You've got no idea about some chemical contract that's been,
Yes.
$40 billion, and it's like, well, okay, so that's basically the whole entire high street of the southeast for a year, for example. Whereas you're all walking down the high streets in the southeast thinking, oh my god, the world's ended.
Imagine a nuclear power station, or as you say, like
Yeah,
a chemicals plant.
yeah,
They don't turn that off. That that
yeah.
stuff just runs. I mean,
But 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 the, yeah,
the national grid, the power
yeah,
generations, the infrastructure,
yeah.
that has to keep going.
Yeah,
It
probably
has to.
one month turnover of a nuclear power station is every single hairdresser in the whole country for 10 years.
Yes,
It's just
but
it's
again, the new. I always blame the media. I hate the media. And the media,
we're the new media, Barney. We're the new media.
I know. We're going to put them, we're going to put them out of business. The you know, the, I find it's annoying to me. Like, if you're a lazy business journalist, you talk about retail sales and footfall, and
Oh, no.
you go and show a picture of a shopping center, and it's
Yeah.
easy because it's visual, and the reader or the viewer can relate to it. But that's not, as you say, that's not the bulk of the economy.
No, it's just the stuff you can easily see and easily interview.
Yeah,
The other thing as well, I said it on the podcast, but I'll say it again. It's like I'm watching a randomly ended up watching a program about, I don't know, shoplifters in I'm not going to mention the town, but some town that's known for shoplifting, and they said something like 70% of hardcore drug use is funded by shoplifting, and I'm thinking, so 70% of hardcore drug use is funded by people stealing from the shops, people stealing from the high street, people stealing from bricks and mortar shops. Haven't bricks and mortar shops got it hard enough without funding the drug problem in the UK? I
yeah,
knew they were connected to some degree. I didn't realise. And again, it's another example of how bad we are in terms of the high street was driving towards a cliff. And the high street in the car saw the cliff, and we've waited almost for it to just fall off the edge. And
yeah,
now the government's saying, oh, let's now cut business rates now. Cutting business rates in 2020.
yes.
I mean, it's absolutely crazy. Literally, the car has got its nose over the cliff. We should have seen that this car, High Street, is going faster over that cliff. We've got to do all we can now, not literally wait for it to just fly off. And I'm watching these shopping centre program, and they're plush marble, very expensive, security guards, 50
Oh,
grand a year. I'm thinking Amazon's got a warehouse 3 miles away from that. That's 9 times the size and costs 4 times less to run. Again, it just it's I have no idea how these shopping centres that, as I say, high. You go in there and you're like, okay, there's some aftershave. I'll just quickly look at it I can get it on Amazon for 13 quid, and they're selling it for 30. Anyway, that's just a bit of
well,
a rant.
I'm
But
sorry. You would have to pay me a lot of money to go to a shopping centre. No, I'm not doing that.
what they need to become is experience zones. So
Yeah, yeah,
shopping
yeah.
centres will become experience. So the high street will become hairdressers, mini golf, make your own burgers,
The
uh,
the the, the one
plunge pools,
the company
sauna shop. I don't know, just stuff.
the retailer that realized this was Selfridges. So about, I don't know, 15 years ago, Selfridges realized that we have to be theatre, we have to be experience, we have to be
Yes,
like a day out, we have to be like this thing that kind of blows people's socks off.
yes,
Because just going, just trolling up to your average UK provincial
yeah.
shopping centre.
Paying 4 quid to park.
I
You
mean,
you can't find a parking spot. Where'd you start? Where'd you stop?
it's just awful. And so yeah, you either need to like be kind of amazing, and or and or niche and or original and or have some element of kind of community about it.
Yeah,
But I
or
won't,
online.
I
Yeah.
won't, or online, and I won't mourn, that to be honest, I won't mourn most of the high street chains.
Because it's been going on for so long, we underestimate how long we've been saying death of the high street. If
Yeah.
you just ask both of us how long we've been saying death of the high street, we might say 10 years. It's probably been 25. It's been so much longer than we actually think. And as I say, the high street is the car driving off the cliff. We've just let it drive off the cliff. It is unbelievable.
Again, the other point, kind of back to, back to this sort of point around managing humans and human behaviour. To me, so much of society's ills kind of come back to that. So you're talking about, how much drug use and drug deal, is funded by shoplifting. That is a problem, or that's a societal problem.
Definitely.
That's a people's self-management problem.
Yeah.
That's a social capital problem. That's a community problem. That's the narrative.
Services, purpose, everything. Yeah,
So
that's the everything. That's the underlying problem.
again, one of the main reasons I hate the most media content is it's like, the way it's written is that every consumer is blameless, faultless, rational, sensible, and it's just those evil companies that are kind of taking
Yes.
all their money. There's got to be some personal responsibility, and there's not easy answers to that.
No, definitely not. Anything else on the fire stuff? Yeah, what have you seen? Sort of people that are sort of just dabbling in the fire community.
Well,
What have you seen?
I think I think maybe some of the air will go out of those tires, because I mean the economy will be harder, and so I just think that you'll see a few less kind of newspaper articles about I made it to fire age 30. That's just clearly going to be harder. And so yeah, maybe that will kind of fade away a bit. I mean, to be honest, the cult aspects of it kind of won't be missed, because, I'm a great believer that the reason I like the sort of financial independence mindset is because people tend to be independent thinkers in that world. So the idea that you can kind of have a cult of people that just follow slavishly a formula, I've always had a little bit of a problem with that
Yeah.
aspect of it. So I won't mind seeing some of the cult aspects die down.
It's like all the independent thinkers focus on the same idea.
Yeah, exactly.
It's like,
There
do we
might be a
not see the
problem
irony
there.
here?
Yeah, exactly.
But that is the oddity about the FIRE movement. As I've said in the past, they're peddling wisdom and not information, which is very rare. Because once you strip something down, I can't remember the exact quote, but once you've got everything rid of it, it's perfect or whatever. Like simplicity and all that stuff.
Yeah.
Once you say that this is the correct place to invest all of your money and it's been proven forever, that's fine. This is what you should do with your net income, which is 5. This is what you should do there. This is the maths behind it. It's only about 5 or 6 things that you go, okay, I get that. And it is like the 5 commandments, the 8 commandments, whatever the hell it is.
Yeah.
And they can't really be improved upon.
No.
This is why it's hard to scale this movement, because it's just boring. It doesn't really change. It's like, okay, you did it at 32, you did it at 34, you all did the same thing, you did it at 53. Yeah, but as I've said, everyone's playing the FIRE game anyway. Everyone's trying to become financially independent. Everyone's trying to retire. They might not be playing the E game, the retire early, but they want to stop it one day. It just depends on how consciously you're playing it.
Exactly.
I think the thing that is going to be interesting, like big business, big investment companies, big investment houses, they've worked wonders on emotional finance. Come to our beautiful office, skyscraper in the sky, beautiful lifts, nice coffee, thick carpet. Whereas now they've got a dude in a suit on Zoom, and then they've got me on Zoom. So comparing like what it used to be, which is, people always want safety, even though it costs them an arm and a bloody leg. Private banks give you free banking if you give them £1 million. You give them £1 million, they're going to charge you, 40 grand a year on that £1 million, and they're going to give you free banking over here. It sounds great. So I think some of the larger companies are going to be harder. I think they're going to find it harder pitching, because the playing field is going to be quite level. If everything's going to be, on video conference calls, it's going to be a level playing field. It's not going to be come and meet us in our Mayfair offices and literally before you leave, you're going to get your pen out and sign. So that's going to be quite an interesting thing, how that's going to play out.
Yeah, well, that's they need those. They need the Mayfair offices. They need country life on the waiting room table.
Yes.
They need horse and hound. They need
Yes.
all of that. All of those
Expensive
trappings,
smelling aftershave.
the trappings and the trimmings.
You're successful because you're here. You've done well because
exactly.
you're here.
You're essentially those wealth management businesses are essentially validating insecure people, and they're kind of playing to people,
pandering they're
to them.
Brilliant at taking people up the yes ladder.
Yes.
Me and you take people up the no ladder. Should I do this? No, it's a bad idea. This is what you should do. But they said do this. No, they're wrong. So once a client becomes a client of mine and yours, we've taken them up the no ladder, and they're in. Whereas they just, yes, we can do that. Where do you think the market's going, Barney, in the next 9 days? Yeah. Answer.
Yes.
Oh, yes, ladder.
Yes.
We got no idea. They're going, this person sent me a 28-page report. This guy's saying he doesn't know. Who am I going to give my life savings to? The person who sent me a 75-page report that looks incredibly fancy, or the person that says you shouldn't read any of those reports and I don't know where the market's going? Yes. It's not quite a no ladder. It's almost like a no trap door. We're sort of throwing them down the no trap door.
If you want to find the people in the world that really understand human psychology, go and talk to advertisers, and go and talk for wealth marketing, wealth management marketing directors. Those people understand the dark arts just to a scary
influence.
degree.
Their influence game is amazing. I know the influence game well, but I do anti-influence.
Exactly.
I'm playing this odd anti-influence game, and I don't know why. Me and a few guys in the financial world and a few people, we're often thinking we're going to set up the perfect influence bit. It's going to be called the correct name. It's going to be in the correct place. The funds are going to be called, the success fund. the
I
XYZ BT global tracker. It sounds crap. What,
yeah.
passive? What, you're not doing anything? Yeah, we're not. So again, it's even framed incorrectly.
Well,
Passive versus active. Active sounds way better.
I remember I had a number of discussions with a leading wealth management company that shall remain nameless, and I walked away from those discussions thinking, those guys know
Oh,
no,
brilliant.
they
Oh,
they know
sorry,
they
brilliant,
know
brilliant at
they
human
know
nature.
nothing about
About investing.
finance or
Yeah, yeah,
investing,
yeah. That's
and they
irrelevant.
and they know everything
Everything
about
about influence.
persuasion,
Yes.
influence, human psychology, kind of aspiration,
Everything.
greed. They oh my goodness, they are
Yeah,
good.
yeah.
They are
They
good at
are they
that.
are brilliant. They are brilliant. Yeah. A lot. It's like being in the lines that going to car salespeople as well. They're great at it. So they do all these things. I've got to come back, speak to my manager. Do you want that? All that. Yeah, but they understand human nature. But this is people also get confused about this when you say, I'm a salesman, and they go, oh, sales are dirty. But it's like everyone's in sale. Everyone's in sales. To
Mm.
Sell is Humans, a great book by Daniel Pink. But people are sort of shy. Well, no, I'm not in sales. But how can you move people if you're not in sales? But yeah,
Well, the way I put it is like, oh, you're
it's
not
the
in.
integrity of the salesperson, not just being labelled a salesperson.
Also the
Yeah.
people that say that, it's like, okay, have you got a job? Well, what do you think a job interview was if not a sales pitch?
Everything, every single thing that you do in life has got a form of sales influence persuasion in it. If you're going to take ownership of that or not.
Yes.
Um, but yeah, it's the advertising executives, the investment managers, and the car salespeople. They know human nature inside out. But there's obviously good and bad ones. But as I say, it's the intent of the salesperson, not just that they're a salesperson or not.
Well, that's
Interesting.
yeah, that's a nuance point, and it's a kind of nuance that's often lost, I think. But
Definitely.
it's a good and an important point.
Yeah.
You
I
know,
think when people start.
intent.
Go on.
Sorry, I'm just going to hammer that point home.
Yeah.
Intent matters, right?
Yes.
Where people are coming from and what they're trying to achieve matters. And so, if you're trying to choose an advisor or a wealth manager, you should ask yourself, where is this person coming from?
Yeah.
What's his intent? Is his intent to help people? Or is his intent to enrich himself, or what is the balance between those two, right?
Yes,
Because
because there's obviously. Yeah.
there's
Yeah.
obviously some
Yeah.
mix there.
I think when people in sales type roles, even professional services businesses, when they start saying I'm not in sales, I think they've lost it. I think they've lost it.
Yes.
Accountants, solicitors, financial advisors, whenever they say I'm not in sales, it's a service, it's a wonderful service. There isn't a queue outside your door. You need to convince people in a nice way that they need to slightly change their behaviour, which is of the benefit of them, which is inadvertently of the benefit of the business because we're in a capitalist society. Capitalism is positive. It's also destructive capitalism in terms of things that are not doing well will get pushed out. But the minute people who are loosely in a sales environment say, oh no, we're not in sales, our service is so great, it just sells itself, and I just think you've lost it.
But just on that point, I think the purest form of capitalism is like a farmer's market or like a festival when you've got all those like people selling sort of
Food
trinkets,
trucks. Oh yeah, trinkets
or,
and food trucks. Yep. Yep.
like
Yep.
bracelets
Yeah,
or
yeah,
as you say,
yeah.
food trucks. In other words, small scale capitalism, small scale kind of free enterprise is the purest form. And if you're a farmer and you raise this kind of prize herd and you're now selling the product at a
Yes.
farmer's market, you have to sell it. You have to create a
Of course you do.
story, and you have to tell the story. And that is a good thing and a noble thing. And you
Yes.
should have no shame in that whatsoever.
Definitely. I 100% agree. Any final points, mate? I think we covered quite a bit.
um, no, I think it's always good to check in, and yeah, like who knows what's coming next? Not us, but 2020 has just been it's just been a great learning experience, actually.
It definitely has. It definitely has. Um, we are in August 2020, and the market is somewhat recovered. Um, yeah, I don't know where the market's going. I don't want to sort of push each other for a sort of a prediction. But yeah, it's going to be interesting when sort of a vaccine comes out. If there's a serious wave of second waves in big countries, which is loosely going on at the moment, we're not going to know the full impact for general business, like big business, really. Yeah, and obviously the furlough scheme is taking a lot of weight at the moment for mainly the sort of medium, sort of small sized businesses, not
But
so much the large
the,
ones.
all of this actually would be my parting thought, which is, to me, the benefit of financial independence, FIRE, whatever, call it what you want. The moment I stumbled across the Mr. Money Moustache blog in 2013, I thought this is brilliant. And the reason this is brilliant is because the implications of this for society are huge. It
Huge, yeah.
essentially allows anyone to think better, smarter about money, kind of take more control over their money, and get out of debt. Just get out of debt and build an emergency fund. So the reason I was kind of captured by FIRE and I thought it was so exciting is the learning points and the implications for everyone. I'm
Yeah.
actually not that excited by a few accountants, I me, or software developers, reaching financial
Yeah.
independence at 30 or 40, whatever, and never working again. I mean, that's as interesting, and it catches people's interest, and it
But
catches
we've still not
headlines.
seen we've still not seen the full rollout of that, because they might do that, bugger off a few years, then they'll come back and say, actually, you know what, the fire wasn't what I was looking for.
Well, we all need
Uh,
something to do, right? We all
that
need something to do.
that's a movement for general people, the unretirement movement. People are retiring, spending 5 years retired, and then coming back to work at 70 because they're like, I've got a few decades of like all, and I've got shed loads of wisdom. So the unretirement movement's quite interesting.
Well,
But
that's ironic, isn't it? Because I agree. So I write this, I write the blog and I kind of promote those principles of financial independence. And sometimes people say, so you're kind of promoting, early retirement. I say, no, not really. So, one of my personal kind of, in my little community, there's a little Tesco shop, and there was a lady there who's working age, I don't know her exact age. She must have been 85 if she was a day.
wow,
And 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 when I see her, I think, good for you. You are, active, engaged, doing
purpose.
something. You've got purpose. You've got structure. You've got routine.
Yeah,
You see people. That's your anti-Alzheimer's treatment. That's your
yeah,
anti-dementia treatment. Right there.
yeah,
Just
brilliant.
just going to work now. And to me, that's a beautiful thing, right? So I'm not this kind of, I've never believed in that, oh, you must stop work at 40 and never work again. I've always thought that was nonsense.
Yeah, no, agreed. But that's how the media take a negative slant on that, don't they? And it's going to produce loads of, uh, productivity lost, because there'll just be loads of these people that are financially independent sitting on a beach in Thailand, which is, maybe the case for a few weeks just to get the photo,
Yeah, yeah.
and then they come back and get
I
involved.
mean, for me, tough, times are tough right now economically, and they're going to go on being tough for a while.
Yep,
And the principles of financial independence, they are built for tough times. So
absolutely.
you might not get to quit age 30 or age 40. You might just need these principles just to kind of keep your head above water.
But the great thing about COVID on financial wisdom, it's had zero impact. It's just amplified how correct financial wisdom is.
Yes.
So that is the whole thing. People moving from financial literacy to financial literates, and that is a journey. And once you are a financial literate, you would have hopefully been prepared for COVID as best most people can be. But as I say, it's had zero impact on financial wisdom. It's had a shed load of impact on a lot of stuff. Flavors of the month, just random ideas, loose structures. Yes, that's why I think it's great. Thank you very much for your time, mate. As always, people can find you at theescapeartist.me. Subscribe to your blog. It's brilliant. I'm just going to do a public statement. I've stolen your idea, how to bring the 3 flavors of risk to life. So I've got this thing called the Informed Risk Scale. I've been banging on about it for a while. And I was putting it together anyway, but then I saw your turkey to describe what's working now. So I've been saying what's working now blows up. And you were like, oh, I've got to think about that. And I said, oh, well, what is
Yeah.
it? You said it's the turkey. And I was like, okay, that makes sense. The turkey is basically, you're born as a turkey, the farmer comes in. This is my version of it anyway. I've probably
Yep.
made it worse than yours. You're born as a turkey. You're given food every day. The farmer comes in. Life's good. You're with your mates. Everything's great. Everything's happy. One day, you see all your mates getting loaded into the truck. It's, December the 24th. It's Christmas Day tomorrow. Your lunch,
Yeah. Yeah.
off you go. It was great. It was working until it didn't work. This
Yeah.
is how all things blow up.
Yeah, peer-to-peer lending.
Yeah, lots of stuff, lots of stuff. You
Yeah,
know, we do things which have always worked. So I stole the turkey off you. And then I thought, well, what about inflation? Because I've been banging on about inflation. Again, it's the second most dangerous flavour of risk. And then I think you did an ice sculpture, didn't you? And I've enhanced it. So I've called it the Swan Ice Sculpture at a wedding.
yeah.
Did your ice sculpture have a place? Where was it? Is it
Yeah,
just...
yeah, no, it was. I had a picture of it. So
Was
it
it?
was. It was.
Oh, so that's where I stole it
I
from.
think
But
you. I think you stole that from me,
yeah,
mate.
but you didn't call it a Swan Ice Sculpture in the article.
I probably stole it from someone else. I don't know.
Okay, yeah. If you steal from me, you're stealing twice. And then the final flavour of risk, which is the one that everybody fears, which is the least dangerous, is investment market volatility. It's the friend of the financial literate. It's the whole reason for the returns. And the way to describe that is a roller coaster. I think that was you as well, wasn't it, mate?
Yeah,
So yeah,
yeah,
you get in the roller coaster, you have a bit of a, few loop the loops. Oh my god, this is going to be horrendous. Am I going to die? And then, shoom, you're back into the
yeah.
safe place.
As long as you don't get out halfway through the ride, that is very dangerous.
That is exactly it. Yes, that's a brilliant way for me to use 3 stories to bring my informed risk scale to life, mate. So thank you very much for that. It's not often I steal ideas so blatantly. So yeah, it's
You're welcome
thank you
to
very
that.
much for that. Yeah. So again, the more we can do to
Yeah,
frame things correctly for people.
pay it forward. Yeah.
Exactly, mate. So thank you very much. Thank you very much for your time, mate. And I'm sure I'll see you back on. Any final words, or is that all good?
No, good to see you, mate. See you again soon, hopefully.
See you soon. Thanks, mate.